So it's important that we start each day asking ourselves three critical questions. What, who, and how. The what? Trading environment. The who, we know who it is, but where are they rotating the money and where are they controlling the independents, the asset classes? Let me do one more check because I'm not getting any answers. Everybody okay? Can you hear me? See me? Yes? Awesome. Okay. And then, of course, probably the most interesting question that everybody wants to know first is, how can I profit? Well, if you can answer those questions properly, when I say properly, at least be able to identify it as a process on which to follow, your trading methodology, you have yourself a very good chance of finding a high probability setup. Because of course we know that there are no guarantees. We're not going to find a guarantee trade. If you've come to this room and expecting us to tell you that our system is going to deliver X percentage winning ratio, you're in the wrong room. If you're here to get a good, solid, foundational understanding of who we are, how we do it, and how we profit from it, you're in the right place. So Rios Quant Made Simple is simply this, is understanding that quant trading is nothing more than systematic, and it's an implementation of trading strategies, not one. There's discretionary trading, and then there is auto trading. We have a solution for each. We're disciplined, and we have a methodology that can either be discretionary, as I mentioned, or automated. Well, I had an individual in a consultation Monday, highly advanced individual. He knows how to find setups on his own, but he also knows the more that he looks at, the more instruments or contracts that he looks for, the easier it is to be misguided, not be able to focus totally on the discretionary part of his trading, which he likes, but he's now moving far more closer to auto trading. And I don't mean set it and forget it in this case. I'm referring to having an auto system. We have one called Einstein that allows you total flexibility to turn on and turn off the auto. I'll show you what I did before the thunderstorm started rolling in last night. I set Einstein on and it ran through the night. Meanwhile, I was down when I turned on. I mean, I could see I could see my screen. I didn't even have a TV, so I didn't have a clue into what gold did until I called Joe Rios, my colleague and good friend, to let me know what was going on. Thankfully, AT&T, which I'm not really enamored with, told me that my part of the community was going to be up by 9 o'clock, and sure fired, they were up by 9:05. So we're disciplined. We have a methodology. We're automated. And quant traders are taking a lot of data, but using tools. They're not doing we're not crunching the math. What we're doing is taking a number of different technical components, and it brings it or distills it into some form of numeric rating or numeric ranking system. In the case of the what's going on, identifying trading environment, what the day may look like, what your position sizing should be, contingent on that trading environment. We have a ranking system. A rating system is in a technology called Gnostic, Gnostick. The word nous, G-N-O-S, or gnosis, is know, to know or knowing in Greek. So no tick. This was made, Joe came up with that a long, long time ago. So the quants, who we are as traders with Rios, we're using tools that mitigate the pitfalls that often plague discretionary traders, such as trading decisions driven by indiscipline, greed, and fear. Well, let's talk about the greed and the fear, because I truly believe that greed and fear is what creates the indiscipline. Would everybody agree with that, or you don't know? Just say yes or no. If you say no, I'll just take it for you don't know. Well, greed is all about what your position sizing is. That's what we're talking about. If you're over leveraging in your account and you really don't know what you don't know, meaning you don't have something telling you to either increase the leverage or decrease the leverage, meaning the number of contracts or size you're doing, and if you don't know what you don't know, then what you are doing, if you are over leveraging and you don't know it, according to the resource in your account, the size of your account, you're setting yourself up for subconscious fear-based behavior. That is just the reality. And somebody sat me down a long time ago, and it was one of the very first things I learned after I blew out probably my second book, my own, just what it was, because I couldn't get it. Well, now what we have is a tool called the RQ Crossbox that addresses this, and it addresses it very comfortably, and it helps us follow the money trail. So when we look at the first step, what the market environment is and how it might be affecting the trading day, we then can comfortably identify where the market rotation is and that sentiment instantly. So we're not having to think too much about what's the position sizing, how much should I put on it, what's the trend line, is the intraday matching up with the outer day, or is the intraday data matching up with the wide angle or the bigger time frames. And then we look for momentum, because the one thing that I want to share with everybody, and the members know this, and we've got a great group of people in today, is we're momentum traders. We want to go with the flow. We are not interested in fading resistance or fading support, and I think everybody knows what I mean by that. Yes? No? We're momentum traders. So why don't you tell me with an M or an F, which one are you? Do you like to find the lows and fade against support, meaning buying it way down, looking for the turn, or are you looking for some form of indication that the momentum is up or down and going with that flow? Rick says he fades. Okay, well, there's absolutely nothing wrong with that. Wayne says both. Certainly nothing wrong with that. Well, so you can make sense of what you're going to learn today, or have be repeated today if you've sat in on this on one of my workshops before, is that you will know that we are not interested in fading. We are interested in going long with the momentum or short with the momentum. And we have indicators that clearly identify objectively where that should be. Each one of these three elements that we've gone through are equally as important to us. And these are the three quant steps. It's knowing what's really going on through the dynamic market sentiment, which we find in one of our tools, as well as the RQ Crossbox. Who's in control? Next stream is what it's called, and it locates or shows you at a glance in just a moment where the aggressive bullish or bearish momentum is, and then how can I profit. And what we're going to do when we finally get onto my platform, which will be in the next 10 minutes or so, we're going to look for trades and identify either an RQ channel, which is a breakout momentum indicator, or Gnostic, which is looking for an early formation of a reversal into a new trend, that would probably help people recognize or be interested in fading. Or just looking for reversals, real reversals that have a high probability of continuation into that trend. Or we have what's referred to as Einstein. Okay, so with that said, we're going to go to the RQ crossbox. Just going to drop this down for a moment. And now we're online with riosquant.com. I'll give you the website address in your chat box. This way you can go to it. For those of you who've never been there, you can go to it and, sign out or sign in with a free trial. Here, I'll just come out. You just hit free trial. It's all yours for 2 weeks, and if you're a stock trader, it will help. If you're a futures trader, it will help. If you're a Forex trader, it's going to help. Oh, got to get that straight. Just a minute, I thought that would be cashed in. Oh, there we go. Okay. And if you're interested, because we're going to go through this, I'm going to give you, rather than a cheesy little, email that's saying, hey, if you do this, I'm going to give you a free user guide. I'm going to give you the free user guide right now. Here it is in your chat box. And let me know, please, just give me some feedback if you can see that link. That's going to give you a clear understanding of what the RQ crossbox is. It's a quantitative analysis and a ranking, as I mentioned, system utilizing multiple disciplines of evaluation, including macroeconomics, sector rotation, fundamental, and technical analysis. At the core of the system is a proprietary algorithm designed to interpret historical data in order to reveal predictive future metrics. Now, let me say this as you read through that. Joe Rios, my colleague and good friend, he's been in the market since 1988, 87, 88. He started, I believe, with Prudential Securities. He was involved in this quantum managed account. That was one of the first managed accounts around, with Prudential anyway, as I understand it. But he's a money manager. He is not a software developer. Through his growth and evolution as a money manager, he started writing algorithms throughout the 90s that would best suit his needs as he saw the market. He's truly a price action person. We're not interested in moving averages and your traditional types of indicators, and I don't stand in judgment of them. I just do know that those types of indicators, with the rapid speed of the markets and the changes that markets go through today, those types of indicators are antiquated. Maybe some people will agree with that. And what he built in this RQ crossbox was first for cross-market analysis. It wasn't just for stock indices. He covers metals, grains, energies, and foreign currencies. The tool assists in managing the risk for active trading and portfolios. This is one of the keys that I'm going to focus on in just a moment. You see the next couple lines down where it says position sizing tool for multiple asset traders? We're going to stay with that. And let me just close this tab down now because you all have the link. It's all yours. There's a ranking system, as I mentioned, but before we go into it, there's 3 different components built into this RQ crossbox, basically. We're going to cover 2 of them. Today's Thursday. Things are quiet, but we've got 4 components. We have the different asset classes, which are going to give us our rankings in each one of the asset classes. Metals, you can see that gold and silver basically the longer term, the wide angle, the daily data, weekly, the longer term time frames still show a ranking of bearish. Energy, both of those, crude oil and natural gas, are showing rankings of yellow 2 and 3. Grains the same, as well as Forex, or the foreign currency futures. Don't be misguided, we trade both. Now, let me just keep things very simple. Yellow from 0 to 3 or 0 to minus 3 is going to be yellow. How do these rankings arrive? Where do they come from? Simple. Each one of these 9 columns, which is a different technical component, gets a rating. The rating is 0 to 2 or 0 to minus 2. So if we add these components, the 9 components up, where the algorithms were assigning a specific value, as I had mentioned, 0 to 2 or 0 to minus 2, you can see that the S&P's major trend is a plus 2. That's as good as its value could be. But the major is overbought, oversold, and it was assigned a minus 1. So you have 2 plus a minus 1 is at that point a plus 1. Well, the minor trend is still a plus 2. So the aggregate would be plus 3. Moving forward, adding another value, no value for overbought, oversold in the minor, but for the pattern there was a 1 set. So there's 2 plus minus 1 equaling 1. Adding plus 2 is now plus 3. Adding 1 is plus 4, but at key levels might mean that it's at resistance. It's giving you a minus 1, so the total overall synthesis when adding these values of each one of these components gives you a quant ranking of 3. Well, anything 3 to minus 3, 7 variations of neutral, from 0 to plus 3 or 0 to minus 3, is neutral. It's yellow. So what does that mean? It means that if the overall daily data, including all of these different components, technical components, are telling you it's neutral. Let's say 3 is a strong neutral. Let's say minus 3 is a weak neutral. But neutral, would you want to be aggressive with your position sizing or light with your position sizing? And I'll wait for some answers. This is how objective this is, and this is what now we're going to get. That's right, Wayne. It's light. Why? Because you don't have, regardless of what the intraday trading pattern looks like on your chart, you don't have a strong enough, robust daily ranking. That's quant. It's taking a number of different data points or components, assigning it with algorithms, giving you a ranking. Now, we don't have to do the math. We don't have to figure out. I've spoken to people that have literally sat in preparation the night before for an hour, hour and a half, looking at trend lines. I used to do that. We all need to be prepared. But you see now, quant trading is far less complex than maybe you have been thinking it is up until recently, when maybe you're coming in touch with us. Quant is nothing more than having tools that do the work for you if you trust them, and helping you, in this case, determine what your position sizing is. Okay, well, you can see notes are a minus 5, minus a red 4. Remember, anything below minus 3 is now going to be a red 4. And I might not have mentioned it, but now I am. And in that link I sent to you, it will clearly discuss that and show it to you. So when the rankings go to plus 4 or minus 4, it changes colors. Plus 4 will be green. Now let's go back for just a moment I'll do it this way. Take a look at the pie. This is today's pie. This is all the asset classes in the form of an allocation. And you can see there is not one bullish instrument, and 2/3 of all the instruments within their asset classes are neutral. Fact is, the only 3 instruments that are bearish is silver, gold, and 10-year notes. Now, does that mean that you just go off and go long gold? In fact, no. You don't. You would hope there's going to be a intraday setup that will match up with the ranking, but if there isn't, it doesn't mean that you don't do the trade, or if you see something that is compelling on the long side of gold, it just means that you're going to cut your leverage way back if you like a bullish setup on gold. Does that make sense to everybody? Because I'll take a break and answer questions if you have any. And good morning, Jimmy. Well, Wayne is participating. Craig is participating. Anybody else want to throw their hat in the ring? Randy. Oh, hello, Randy. Yes, that makes sense. Okay. So, because it's red, but you have a bullish setup, doesn't mean you'd ignore it, especially if the setup and your tools are telling you that there's compelling evidence that the market's going to go up and maybe you can make a couple bucks in gold. Okay. So, component 1, it gives you your rankings. Component 2, you get a quant report knowing what's happening through London, giving you specific information. Asian stocks rose last night with the regional benchmarks poised for its longest streak in 3 months. U.S. stock index futures climbed, signaling the Standard and Poor's index may extend its record. UK gilts, 2-year bond yields climbed to its highest level. Commodities, natural gas rose for the second time in 3 days. This is all overnight in London. Speculation that the forecast to start the new year in the U.S. may increase demand for a heating fuel. Remember we talked about this last week about how the weather might drive natural gas? Well, natural gas is still not bullish, so don't go looking at a 24-hour weather forecast is saying, damn, it's minus 30 degrees in Minnesota, I'm going long natural gas. Those days of fundamental decisions are long gone. Just keep an eye on your quant rankings. Natural gas happens to be a strong 3. In fact, you can look at the line chart and tell you where it has been. We were actually at 4 until just last night when things changed. This is actually a change overnight from a +4 down to a 3. Well, we know what that means now. Light position sizing, regardless of what the setup is. Maybe we'll look at that one. So component 1, what our rankings are, what our position sizing should be. Component 2, what's happened overnight. What reports are coming out? Job claims were reported today. I don't even know what the numbers were because I was still down. Can anybody tell me where the weekly numbers were, if you don't mind? What it was expected and how it came out? Thirdly, you have an upside list from a downside list. Well, these lists have not changed for the last couple of days because things on a macro technical and overnight have not really changed. We had holidays, so things are pretty much the same. Here are your benchmarks. 10-year notes ranked highly bullish. U.S. dollar, bullish. S&P 500, a strong neutral. Why would you think, and I'm going to see who's got their, their understanding of correlations. Why would you think that 10-year notes quant ranking and dollar quant ranking are exactly the opposite, meaning yields going higher, dollar going higher? This would be prices going down, futures going down, but yields going higher, and the U.S. dollar is bullish. So Rick was telling me that 346,000 was expected forecast, and it came in at 338, which was a little bit better than expected. Yes? Why would you think the dollar's bullish when the 10-year notes are bearish? Wayne says risk on versus risk off. Aha. That's good. That's a good guess. That's not bad. I'll tell you why. Think about it. If 10-year note prices are going down, what does that mean to yields? They're going up. If yields are going up, it means that the U.S. dollar at the moment is in vogue. What I mean by vogue is money is moving to a higher yielding currency because they're getting more yield on the dollar. U.S. 10-year note futures are going down, yields are going up, money is moving to dollar to get higher yield. Does that make sense to everybody? Well, that relationship is going to affect all other instruments in one way, shape, or form. All right, so we have position sizing with the ranking. We know what the benchmarks are. I think tomorrow with more action, with New York being open today and then everything kind of getting back to normal, maybe lighter volume, but doesn't mean there's not volatility. Gold will show you that today. You have upside and downside lists. So it's very easy to say, okay, I'm looking at the Dow Jones, NASDAQ, and Russell first on the long side. Even though the quant rankings are yellow, that means that I may be selecting the Dow Jones, but I'm doing light position sizing. And then I'm going to look at the downside opportunities. Well, I looked here. This was from actually not yesterday, but from the day before and rolled over because we were on a holiday yesterday. But gold was still bearish. And before I left for the evening and got offline at about 9:30, 10 o'clock, I saw what I thought was a pattern that was going to send gold in a specific direction, and I decided to put on Einstein, my auto trader, for overnight and set it for a specific time to start and a specific time to end in terms of any new trades. So I had gold live last night. Only problem was it was still live in the sim account. This is a simulation account. It was still live, but nonetheless I had to live with the consequences no matter what. And I would, based upon what I saw, my electricity and everything went down here. I went down at about 2:30, 3 o'clock. Okay, so let's now move on. I'm going to do a couple more slides. We've now looked at market environment. We know how to find risk on, risk off environments, mixed or asset classes, and then where are the potential incomes, whether it be intraday trades, choppy patterns, reversal patterns. We're going to follow this sequence as I come on to my platform. Here's the sequence. Now I'm doing that because I don't want to just throw a bunch of stuff at you, but here's the whole screen, just so it looks neat. That was a good answer, Wayne, by the way. Very good. So here's our sequence. What's going on? Trading environment. Who's in control? Well, we knew who's in control. We went through that. But where are they moving the money? Financials, commodities, Forex. Step 2. Step 3, the alpha signal. That's nothing more. It's fancy language, but it means the trading signal. Are we going to use a momentum indicator because the setup dictates it should be? It's most compatible? Or should we look for a reversal where there is a new form of trend taking place? Or is the market sideways and not easy to determine at that moment, but you know that you have something that's automated that will pick up the appropriate bullish or bearish signal? And here's where the logic comes in. I'm going to take this down. We're going to come to my screen, and we're going to do just a simple little, and I did this Saturday. Which way? Now, don't look at you. Everybody probably knows what gold has done by now. Right now, we had a gold trading between 1206. Oh, let's just do it this way. From about 2 o'clock, we had this. Now, we know, you guys probably know what gold has done already, so don't cheat. Can you tell at this moment which way gold is going? Let's say you come online like I did, but I couldn't get online, and it's 7 o'clock, and you've got this. Going long? Short? Do you know which way? Do you have any inclination of what to do? Or do you think that the guys trading in London right now that like gold are getting chopped? Well, we don't see chop as a negative like a lot of people do. In fact, we don't even call it a chop. We call it a channel pattern. There's a channel pattern. So moving forward, more of the same. Ah, look at this. Now, you sure you want to buy this breakout? Let's say right here. Let's just say it's right here. Are you certain of it? Or do you feel you'd be guessing? Right here. What do you think? Rook says he'd be guessing. Wayne says the pattern is an accumulation phase. All right. I don't know what tells you that outside of the fact that it's sideways and it kind of moved sideways above this range here. But I'll buy that. That could be accumulation. It could also be distribution. But do you have confidence that this breakout is going to take you to the promised land, meaning a profit? I don't think so, because it's still subjective, isn't it? You can run a moving average on top of this and go nowhere fast, right? Would everybody agree with that? Ashish, are you following me? Antonis? Chris? W? Brian says, why would I buy a breakout with a -4 pattern? No, it's not a -4 pattern. It was a -4 ranking that will determine what your position sizing will be if, in fact, you saw a possibility of a long position. But we're not sure, and you're 110% correct about this. You wouldn't do this right here. Not on a discretionary basis. Why would you? You don't have real evidence outside of, okay, it's broken out, but you'd be taking a guess. Or you'd be wishing and hoping it would go higher. Hello. Look at this. Can you imagine somebody trying to go short because this was resistance for hours from 2 o'clock to 8? 6 hours resistance, and they go like this. Oh, you know what? I'm going to try that short because I like to fade. My point is this. When you have price action moving in a sideways channel, and look where that sideways channel started from last night. This is midnight right here. This goes all the way back. Now what? Okay, there's one sign that there's some growing value in the early evening hours of New York, but then just flattens out. Why wouldn't we think that it couldn't roll over? We wouldn't. It would be a subjective decision. But how would everybody like to look at this from an objective point of view, where it completely mitigates? We know that we've mitigated the fear, right? Because we know that the market's sideways, the quant ranking is bearish. At very least, you're doing a mini gold. You're doing a very light. If you like gold and you're betting on a short or long position, you're just downsizing your leverage and your position sizing. That makes sense to everybody. Okay. So let's now move on. Now let's do something here that's going to show you a picture of complete objectivity, black and white, straightforward, and leaves no room to guess whether this breakout was going to finally do that. Because you didn't know that was going to happen. All we knew is that we broke above a little bit of a resistance on a 5-minute chart, and then there was a little bit of a follow-through. How do you know it's not going to come back down and retest? Because when you get breakouts above resistance, ordinarily, doesn't it retest? I'm going to take the screen down. And to the gentleman that said, why not get to the point and add some value to the webinar? You're more than happy. It'll be just fine if you decide you want to leave and this is boring you. We're very straightforward here. Thank you. Okay, so we have a tutorial. And the tutorial is simple. The upper green line is our bullish NOS level, as we know. And it's the buy side only, pardon me. That is an error on my part from moving too fast. Sorry about that. Okay. So here we go. All price action above the upper green line is referred to as the bullish region. The upper green line is the bullish level, and it's the buy side only of the chart. The levels change just once daily at midnight. These double yellow lines are changed again with all the rest of them. Take a look at how everything paired in. They tapered in. Take a look at that trading range. It came in. And they stay static for 24 hours. So we have the buy side only of the chart, and then we have the sell side only of the chart. This is the notes. All price action below the lower green line is the bearish level. Jimmy, have a good day. So far, is everybody okay with this? I think I bored one person. Thank you, Wayne. Well, Joel left. I'm sorry, Joel. You left, and it's so typical. You left right before you're going to learn the logic behind all of this. It's just typical. So in any event, we know what the sell side is from the buy side. The lower green line is defining the sell side only or the bearish region, and these levels, there's only double green lines. These levels are basically determining the probability of bearish momentum continuation. That's all it's doing, and it's changed at once a day. And we have targets. Supports 1A and 1B are these yellow lines. And these yellow lines, what they do is they define zones. Now, let me move on and just ask you guys a simple question. Whoops, let me just do it this way. Are you better off selling in zone 1 or selling in zone 2? Should be a pretty easy question to answer. That's zone 1. Whoops. This is bearish zone 2. The targets, or support 1A and 1B, which is target 1, pretty much define the zones. So, all price action from the bearish level down to supports 1A and 1B is bearish zone 1. All price action below support 1B down to final target and support is bearish 2. Wouldn't it stand to reason that you're better off selling in bearish 1 than zone 2? Of course. The odds of continuation lower are higher up in zone 1 than zone 2. It's really somewhat simple in that regard. Whoops, 1 second. Now, here is the reverse side. Here's the bullish side of the chart. Levels change once a day. Gold tapers in. Here's the bullish buy side only of the chart. Right in here. Now we know that this is zone 1. Right in here. And this is bearish zone, bullish zone 2. And we're far better off with odds and with profitability of buying in zone 1. That makes sense to everybody, I'm sure. Now take a look at what's happened here. Here's that same sideways action. Now I want to go back. I'm going to take this away and I'm going to get rid of all of this. We've learned our little tutorial on zones. I'm going to get rid of all that, remove the objects, and watch what your brain, let's see what happens. And unfortunately, Joel didn't stick around long enough. But let's look what happens with your brain, how your brain interprets what obviously is an impossible pattern to determine which way the market's going to go. We put on the simple Gnostic levels, which are remarkable as far as I'm concerned. They're like, Joe says, it's like magnets in terms of the accuracy of them. We're going to put the levels up. Now take a look. Instead of being undetermined on whether you should be a buyer or seller, or completely subconsciously there's a fear. Do I go long or do I go short? Just the question mark itself will create fear. These levels are going to mitigate it. Levels established once, market's going sideways, then finally we break and we start moving into the upper side, which we saw before, but now we know that the market is on what side of the chart? The buy side. And that buy side is telling us that we are only buyers. Now, does that mean we buy here? No, that's resistance. Does that mean we try to buy here? Yeah, but only under a given condition, like a rating system. And the numeric system that's assigned, remember, there's ranking systems in the RQ crossbox. There is a rating system, and I'm going to put it up here real quick. 5, green 5s on the buy side of the chart represents highest quality of price action or momentum, whatever you'd like. 3 is extreme. That could mean overbought on the buy side. Excuse my spelling if I'm off, but I was a little hurried. My emotional constitution from this morning was not the greatest when I found myself down, but it all worked out. So 5, highest quality price action. 3, extreme, could be overbought. or it could be oversold if it's on the sell side of the chart. Well, there's one other number we see, and that's yellow. So we're going to put that one as a standalone. That is exhaustion. Let's turn that into a yellow. All right? Clear? So we see 5s, 3s, and 1s. Now just imagine all the numeric system under the lower green line will be red 5s and 3s. Like, here's some red numbers. Oh, here we go. Here's a better sign. Look at all these red 5s on gold a couple days ago, right? A bunch of 1s. You don't see a lot of 3s, though. You see a majority of 5s and 1s, and the market's going sideways. This is telling you that there is accumulation and you don't even know it. In fact, it's on the sell side of the chart. This is an early indicator. This is an early leading indicator. When you're seeing a bundle of 5s like this, albeit it's in the bearish zone, but it's not trending, you have a solution as a potential trade. But you know what? This is the evening hour, so who cares? But this is what I will tell you today, and you're going to see it. I saw these red 5s, and I said, there's no way I'm going short right now. First of all, it's in the evening hours. I'm not going to trade. It's 8, 9 o'clock in the evening in Globex. But I'm taking note of this. I want to see what's going to happen. And if they're going to roll over and go short, so be it. But I'm not going to be up. I will not be up at 2 o'clock in the morning. So what I'll do is I'll say, okay, lots of distribution here. The odds, Quant ranking was bearish, but the odds, certainly the odds for it to work lower. I'm going to set it at 2 o'clock. I'm going to set Einstein at 2 o'clock. I wasn't going to be up at 2 o'clock for a discretionary trade, meaning left to my own device, all right? So I'm going to pull this aside. I'll just actually, here's gold. Let's just pull this down here. Now here's gold. And last night, gold was the next stream momentum indicator, which I'm going to go into, was red and green. You had the middle one, which was red. You had the 3 hour, the 8 hour, which was red, but this was green. There's no momentum in the middle of the night. I don't care. I can't use next stream at 8 o'clock, 9 o'clock in the evening. I think the last when I set Einstein on, it was like 9:30. I said, okay, you know what? London's going to open. Something's going to happen, and if it rolls over and goes bearish, so be it. Now, I didn't see this. I wasn't privy to the market moving to the buy side. All I saw, okay, was a bunch of red 5s before. I'm seeing some greens in here. That's actually what was happening. Here's some trades that went on, that went off. This was a winner, this was a loser. But before I went to sleep, it was right here when I set Einstein on. It's just about here. I saw price action going sideways. I knew the quant ranking was bearish. The sideways action I didn't see because I wasn't up. But I said, look, if these levels are going to change, and the quant ranking is bearish, okay, the odds are it's going to go lower. But I don't know for sure because this pattern was sideways. All right. And it was on the buy side, which influenced my thinking. So this is what I did. I put on Einstein. I set Einstein on for 2 o'clock. Let's make sure I have that right. All right. I did that. I set this timing for Einstein to start activating any live trades back here in the evening. And then the rest is history. My whole community went down sometime in the middle of the evening, middle of the morning. All right. So that's what happened yesterday. Okay, here we are. Let's open this up. Einstein was set for a $200, and I'll show it to you behind the scenes. Here's the settings on Einstein. I had a 2 a.m. start to 9:15. I like clearing out. If I happen to get picked up in a London trade, I don't even want to face the cash market, stock market open. The profit target is 200, the risk is 300, and anybody that recognizes or understands auto system needs to give the auto system some room to breathe. I then calculated it not on a bar close, but I falsed it out and made sure that if there was going to be a trade, I did not want the trade to be in Einstein to be signaled on a bar close. I wanted it to be signaled in real time at any time in that bar, which was a 5-minute chart. And I enabled it. I was just simply hitting true, and all was good. Let me make sure that it's all good. Okay, so moving forward, now my system is down and I wake up. Einstein kicked in at 4 o'clock. I wasn't up at 4. I didn't have a system open, meaning I had no connectivity, but this was connected to the simulation account. I want to make sure that everybody's aware of that for transparency. Remember the sideways action? Remember? Sayonara, goodbye, let's get rid of that. Why in the world would I be buying that on a discretionary basis? Right? We went through this already. Sideways action, undetermined, why? Well, the first why is that it's in the bullish side of the chart, because Einstein follows that same logic. So let's put back the levels. Okay, here's the green line that goes way up at midnight. Price action started sideways in the middle of the chart, the neutral zone as we call it, between the bullish and bearish levels, and then finally breaks above it and then moves sideways, which earlier we decided was going to be pretty tough to decide which way the market was going to go. But Einstein liked it. The algo said high probability of continuation. Make sure, and this is a recommended setting for gold, a recommended setting for oil. What I mean by setting is a $200 profit against a $300 risk. This was the 2 a.m. starting point that I set it for at about 9 last night, and I closed it 15 minutes before. I don't like holding gold for much longer, especially going into the cash market, the benchmarks, particularly the stock market. Too many weird things could happen. News could hit. Who knows what? So I want to be out before the cash market opens with gold. So it does kick in. Sideways. I wasn't anywhere near this. if I was left to my devices, I would not have bought this because this is resistance. But Einstein does not have to follow these resistance bands. The only levels that Einstein logically follows in terms of its algorithms is it will only go long on the buy side or short on the sell side, which it, of course, did because it knew the points that was the demarcation of the bullish side, 1203.80. If it had rolled over, there may have been a very good odds of it going short, but it went long, and it went long against the quant ranking. Well, it's only a one lot. Sideways. Remember the breakout? We decided, not sure about this. There's Einstein's results. Here's the trade. For those of you, this was not a hypothetical. This is what happened. Bought the market at 04. Let's just open it up. Here's gold. And sold it at 0670. So it was bought, it was set for 200, it was bought at 04. Here's the fill. Filled one, if I can get it right. There's 0470. There's the fill. It's the only trade I put on live. The quant ranking was bearish, but I'm entitled to do a counter trend trade. And I actually tried to do a few others. It just, I couldn't get the thing started. Some currencies, which we're going to see the results of. But at least the gold got filled in the sim account for me to give you a specific illustration of how Einstein will ignore the resistance bands, but the algos are going to say something that says high probability. See all these fives? And a high probability of continuation. Now, this got filled just after 8 o'clock. I was still down. As I mentioned, I don't know if I mentioned, but I went up at 9:05. I got connectivity at 9:05. But this is where I was set at 9:15. When I got on line, finally connected, and I saw this fill, I closed it down. I just changed the time setting because this was originally set for 11 a.m. And I said, no, don't think so. And why? Because we were already past, Einstein had taken the profit right below critical resistance, and I did not want to buy another gold contract with Einstein above critical resistance. That's where the odds start diminishing. Does that make sense to everybody? And are there any questions about it? I'm more than happy to talk about it now. I'll be more than happy. I'm just getting rid of some of these vertical lines. It was as easy to close this down as to go into my control center, go to positions, which had gold in it at that point, right-click, and close the position. And that way, okay, if I wanted, but it hit my thing. But once I closed it, then it enabled me, what I could do is comfortably, let me just do this, sorry about that. I could go to strategies and then disable it right here at 9:15. Now, Einstein's still on, but that means it's on for 2 o'clock Friday morning. Now what I'm going to do is disable it so next at 2 a.m. Friday morning, it's not going to expose me to any potential trades. Now it's done. It's over. I've closed it down. And once you disable it, it takes the prices off. Let me see if I can't get this. Yeah, I have to enable this just to show it once again. And that's where the actual price action was. And this is called having some form of, so in the last couple of days, in that setting, 2 o'clock to 9:15, there was one loss, one win, minus 100, plus a gain of 200, so it's $100 just looking at this. These were not done. These are hypotheticals for the same time frame. This was, as I showed you, live in the sim account. But how in the world would you know? You wouldn't. That's where Einstein comes in. And let me just, members that are in trial with Einstein, want to take a trial with Einstein, the pattern is a very simple one. Look for sideways action somewhere in zone 1. Now we're coming up with a new version that's going to identify zone 1 from zone 2, which is going to be fantastic. Right now, it's a gray box in that regard, so it's manual. So with that, now let's start looking for something on a discretionary basis. Let me just get that indicator back up, levels. Any questions to this point? Everybody on board? Understand? I like what's happening here with the ES. There's a nice little flagging. There is a gap that was created. So what I'm going to do is see what that looks like. Well, let me go to my discretionary workspace. This is my Einstein workspace. Here comes my discretionary workspace. Okay, this is where I put on live trades. We're going to try to process some things out. Now I'll get into the market analyzer. Remember, step 1, what's going on? How is the ES and the notes, the two benchmarks, behaving? It's risk on. Price action is on the buy side of the chart of the ES. Price action on the notes are on the sell side of the chart. Buying of equities, selling of treasuries, risk on. Well, let's take a look at what's going on with New Zealand US dollar. You've got dollar strong. Remember, yields going, price action going down in the notes mean yields are rising. So you're going to see dollar strength. And take a look at all of these currencies. Now, dollar yen is bearish. Dollar CAD is almost all bullish now. New Zealand US dollar weak against the dollar. GBP weak against the dollar. So you're seeing dollar strength here. Okay, that makes sense. Yields declining, equities rising, dollar strengthening. You're seeing currencies decline. So it's a little late for currencies, but why don't we do this? Let's look at a risk commodity as in crude oil. Here's crude oil. And crude oil is just now breaking to the buy side of the chart, isn't it? First, what's crude oil's ranking? It's a 2. It's a mildly bullish 2. Mildly a stronger neutral. So I would be using in the real account a mini oil, I'd be reducing my leverage. But for purposes of just demonstration, I am not, we're looking for fives because that's the highest quality of momentum. You can see the market's going sideways. What I'm going to do is use the momentum indicator. This is called the RQ channel. Remember, there's three indicators, the RQ channel, Gnostic, and then the auto trading Einstein. But now we're going to be discretionary traders. We're going to use the principle of Gnostic, buy side only. We're going to look for price action to be at the lowest end of zone 1. Remember, we want to buy, our best odds are in zone 1, right? Everybody remember that? And now we have the RQ channel 2 sitting here. I better put this on 7. I want to see a more conservative setting. In other words, looking back at more history and then pointing forward. And here is the RQ channel 2. We've got what's going on, risk on. That's the trading environment. Where's the money? Who's in control and where is the money rotating? All bullish accumulation and bullish momentum. And I'm late already. Let me just buy the bid and see what happens. Now that may pull me down a little bit, but let's see what happens. I wasn't ready to do this real quick, but there it is, a breakout. Well, don't like to look dollars. I get emotional when I look at dollars. Okay, let's move this to points. All right, so they filled me. Now, this is for demonstration, but I want to show you that is what a discretionary trade is going to look like with a specific indicator. I don't have any green fives. I want to put my limit order in, for about 15 cents. I'm going to do a sell limit. I'm filled at 55. I'm actually going to go for 67 or 12 cents. Now, risk reward when using RQ channel, and I was in late. I should have been filled somewhere near 52, 51. So it's going to cost me. But what I'm going to do is put in my risk just underneath the bearish NOS level. Why would I do that? This is the demarcation of the bearish side of the chart. So that's going to end up being support. Whether I get stopped out or not is inconsequential at this point. What is consequential is knowing where if I got in, and we did, where I would put the stop. I could, if I decided this was a mini, and it would be, I'm just using a standard contract for demonstration. If this was a mini, I would have my stop right underneath this bearish RQ channel breakout. Now I have one level of support, which is the bullish level. Broke above the bullish level, it becomes support. Next, bearish level, support. Next, bearish RQ channel, support. So I have 3 layers of support on this trade. So be it. If they take me out, I'm down 26 cents, or what would be the equivalent of $260 on a mini 130. But a mini contract only would be used in this case. Why? Members, tell me why only a mini contract. This is zone 1. Why would I be using a mini? Brian says the ranking is a -4. That's the first thing. There's no doubt. You know that I went counter gold. I'm going counter crude oil. What's the next thing? There is no next thing. It's -4. I think. I'm going to take your word for it, Rick. No, it's a 3. It's neutral. It's yellow. What do you get? Unless I'm in the wrong contract. No, it's crude oil. It's yellow. The reason I'm doing a mini is the quant ranking is yellow. It's a yellow 2. Remember, our position sizing gets brought down. We reduce the leverage when we have the quant ranking from 0 to 3 or 0 to -3, which will all be yellow. Does that make more sense to you now, Brian? I think you might have been thinking, what was 4? Gold. Oh, crude oil was a yellow 2. That's why the mini oil, if you're going to do it at all. Now let's take a look. We're risk on. Let's look at a currency where dollar is going to show some strength. Let's look at the benchmark. We've got dollar at this point bearish. Oh no, I'm sorry, dollar bullish. And that's what we're seeing. We're seeing a lot of currencies weak against the dollar. Let's take a look at where would be a really good candidate. Oh, let's take a look at New Zealand US dollar because I think that the GBP dollar is way out of the whack. Let's take a look at GBP US dollar. I've got issues here. Yeah, there's something wrong with the, maybe I can, what we're looking for is the weak of the weakest, the strong of the strongest instruments when we're looking at momentum. And we can sort the momentum in next stream, right, by strength to weakness or weakness to strength in the 8-hour, or we can sort it by the 1 hour, and I'm going to explain this now while I get this straight. Next stream is built out of 24, I should say, independent data points. I'll show you, I'll go behind the scenes and show you what I mean. Next stream has 2 30-minute data points, that's 1 hour, 6 30-minute data points, that's 3 hours, 16 30-minute data points, and time is rolling, streaming in and out of each one of these 30-minute data points. It's not on a stop clock where it stops and goes and stops and goes. It's dynamic. So time is streaming through the 30-minute data points, all 24, that make up these 3, 1, 3, and 8-hour columns. And that way you can see the price velocity that's either even or it's not even. Well, NASDAQ is even. We'll look at that. In fact, maybe we should. But we were looking at dollar yen. We've already hit, I'm sorry, dollar, GBP dollar, sorry. We already hit critical resistance. That means on a discretionary basis, the game is over. We're done. We don't even bother looking at it. Everybody on board so far? Are there any questions? Ashish? Chris? Brian? Annette? Atnas? Anybody? Lee? John? No questions so far? So I'm not losing you. Everybody okay with this? Okay, so where I left off is this. We do not bother fading against critical resistance. We use this as a target. Remember what we talked about. I'll go back to it one more time just to give you, unless I closed it. Nope. Let's see where I can find it. Yeah. At the buy side of the market, we use it as targets. I believe it was on the other workspace. I guess I lost it. I did. I'm sorry. The tutorial is gone. That's the Einstein trade. Let's go on back. Oh, wait a minute. Maybe I didn't lose it. Hold on. Here are our targets on the double yellow line, support 1A and 1B. And to go back, this is just a simple review. Here we go. Here's the complete subjective point of view. And then making sure we understand that objectively speaking, we're looking for fives. We know where the buy side is from the sell side of the chart. And we've done that with the oil. And here we go back to the oil. We're on the buy side of the chart. That's objective. We're only buyers on the buy side. We have a momentum indicator. We didn't see any fives, but we have a momentum indicator that told me it broke out. I got in this late. I should have been filled at 52. Something in here. Here was the actual breakout point. So I should have had a breakout, but nonetheless, it is what it is. I've got my stop here. And now what we're going to do is look for something else before we have to go. And I think what I'll do is I'll stay open a little longer. For those of you that want to hang with me, let me know, and I'll be more than happy to continue just to finish it up. So what we're going to do is look for something where there is really robust, very robust momentum, either bearish or bullish. You can see currencies are starting to get scattered now. Let's take a look at New Zealand US dollar. It's too late really to spend. It's 11:30. Not the right time to be trading currencies. And New Zealand dollar, whatever opportunity there was, took place earlier in the morning. But risk on. Strong, weak New Zealand against the dollar. So let's take a look at independence. Those are the instruments that have no connection with the, well, first let's look at NASDAQ. There's the one that we should be looking at. Let's put NASDAQ alongside of oil. Why am I looking at NASDAQ? Thanks, Rick. Well, I'm looking at NASDAQ because the momentum is bullish, but it's already coming up and kissing its critical resistance. So we're done. We're not even going to consider that. And there are some highly advanced people that are members that fade against this. We don't teach it. We don't recommend it. It's not a part of our methodology. But some people do, and that's because the levels are pretty accurate. They're very accurate. So let's move on and see if we can't find something that may show up as a setup. Let's look at dollar yen. That's all bearish. Everything else is, look at that, mixed. I'm going to look at one last currency. Now here's something of interest. We've had sideways action. I changed the setting to 24/7 because there was a gap, but it hasn't really changed much. But look at these fives right here. Dollar strength, risk on against the yen. There's some fives. Does the fives, and here is where the early formation of that new trend, that reversal I talked about earlier, comes into play. We look for fives. We have a built-in risk-reward calculator, and our methodology simply states that we have to see, if we see a 5, which is the highest price quality, we have to have a 2.0 or better risk-reward ratio. And in the dollar yen, that's 3 to 1. That's 5 pips. That's basically 4 pips risked, 4.5 pips risked. See this row right here, as I hover over this 5, says 0.046. If you round that up, it's 5 pips against a reward calculation of 11 pips. Now the odd, what do we have going? First, what's dollar yen? Quant ranking a 2, yellow. Second, there is only my standard contract, 100,000 is as aggressive as I get. I do a 5. I do 50,000. So I change the volume or number of size of contract to 50,000. That's what that is. And if this 5 qualifies right here, it's 1.46. 1.46. This isn't any good right now. I have to wait for a pullback. I'd be chasing if I went after this. But let's just use this as the example for a moment. If we got here early enough, that would have been a trade on the open of the next bar. If you saw this 5, you go market or buy the bid on the next bar. So what I have to do is wait for a pullback, get on back down here if I'm interested in doing that trade. I'm not chasing this. I've already got a momentum trade going in crude oil with the RQ channel. I could choose to look at an indicator, the RQ channel indicator, which I'll do. This is the discretionary trade now, guys. I'll set it at a 2. A 2 setting simply means it's looking back, and now we have this RQ channel 2 setting coming right down to where we are at the moment. Now I have a choice. I could wait for the pullback and get the right risk reward, or do a buy stop up here. All right, right above. That'd be 3 pips above the RQ channel, and I would have to take a stop underneath the bearish level, which would be right here. Now I'm not filled yet, and nor do I want to go short here, so I'm just showing you this as a means of the process of setting up your execution. If I want to do a buy stop with an RQ channel, that's how this is going to look. I'm going to preset my buy stop. If, in fact, I get filled, I'm not filled yet. When I get filled, I then set the stop and then create a sell limit. So I can do that in advance, where I can do a sell limit on 50,000 right up here. So now what's going on, guys, is I'm sitting and waiting to get filled on an RQ channel trade, a breakout. If I don't get filled, get pulled back, price was pulled back to the bullish NOS level, then I'm looking for a green 5. I'll cancel this buy stop, leave the limit order as is, and try and look for a green 5 to qualify. Any questions about that? No questions? And I see that 90% of you have hung in there with us. That's great. All right, so crude oil is starting to, it's hanging in there. We'll see if I can grab my 10, what would be 10 cents. Not actually 10, it would be, I'm filled at 55, so I'm looking for 12 cents. Let's go back here. This is what is breaking the trading code, guys. Being able to see the momentum in real time, the steady momentum. And it changes, and the money rotates. Where you see the selling of equities, in this case, dollar was rising. In conflict, let's say both were going up, you'll see independence. Here's the next stream. Once again, it's broken into 3 different columns, the 1, 3, and 8 hour. When you total up all the 30-minute data points that the 1, 3, and 8 hour create, it's 24 individual 30-minute data points. The time is rolling in and out of each 30-minute data point, and it is measuring the rate of velocity, price action, the up and the down, to the fluctuation. I've shown you what the 5 means, RQ channel, breakout. Einstein, we think Einstein's the game changer. For people that want to mitigate some emotion, or and that doesn't mean to be fully dependent on it. It might mean just to diversify. You might like to trade oil, but you broaden your horizon and you feel more comfortable in having an auto trader work on an instrument that you may not be quite so comfortable in trading discretionarily. Does that make sense to everybody? That's the game changer. Having what's called a gray box. This is not a black box. We have that as well. The gray box is giving you a complete flexibility. We now know what the accelerators are, the 5, 3, 1. We're looking for those 5s. Let's see what's up here. Crude oil still up 4. We haven't gotten filled on the dollar, yen, and I don't think we've come down low enough to get a qualified. No, not yet. There's just the reverse, looking for 5s, catching it. 3s are extreme. 1s are exhaustion. And once again, this whole process and sequence is about 30 seconds. When you know what the trading environment is right from out of the box, you can see it through the quant rankings. You can see it through your own chart and I build workspaces for everybody. You can see the S&P and the notes side by side. You know what the dollar's doing. You then can select which one of the asset classes, and then which signal makes most sense. If you are most interested in just kind of chilling it out, add something that you like but you don't have the time, or you're already following something on a discretionary basis, use the automated system. Like last night, I put that on, the gold trade on, to see if I could find something for demonstration today. And it happened to work out. So, step 1, what's the trading environment contingent on what our architect is telling us right here in our visual aid. Number 2, market selection. It's found with NextStream, which is looking for the velocity of the marketplace. Here is the sequence once again. And for the next 2 weeks, anybody signing up for a trial today, tomorrow, or over the weekend, you are going to have availability of one hell of a holiday incentive price, where prices will be cut to a great degree. I'm not going to go over the numbers today. We want to see you take the trial. But I can tell you that the range of pricing for our different customized packages, because you can choose to use Einstein with the levels. If you don't want Einstein, but you feel that's a little bit above board for you now, you can select our levels and the accelerators, the 5, 3, 1 with RQ channel and the momentum indicator, RQ Tech. So you can essentially, and we can build a customized packages, and the price the price points are anywhere from $1,500 to $3,000, and you get discounts off of certain elements in membership levels. So if you have any interest in doing a trial, just email me. Don't be afraid. There is no obligation whatsoever. None. You get all of the indicators, everything you've seen. And the reason I'm doing this is because I know there's a number of new people in here, and we want people to get to know us. We don't do a lot of advertising. You found us somewhere in the past or just recently, ended up in our database. We emailed you an invitation, and I want to personally thank all of you for coming, whether it be members or whether it be trial members, where I know that there are a number of trial members in. We need to make some coaching appointments for you to get your support up and running. But I can assure you that if you start a trial, you're going to be rather impressed with the price points. Rick, let's hear from you, and don't get overworked out there shoveling the snow. Wayne, you're very welcome. Tomorrow we're doing a trade lab. This is probably not the link, but I'm going to give you the link. Just give me a minute. You'll have it in just a moment. Here's my license. You can see I'm a little bit unorganized simply because of what happened earlier in the morning. Here's the link for tomorrow morning, guys. Come on in. That's our Trade Lab live. Lee Chen, it is recorded for individuals that are members or in trial members. Brian, have you filled, that's a good question, Brian. Brian asked the question, if we are in trial, do we register for the website or do we use the password login? Well, use the password login for the trade lab for tomorrow. For using the RQ Crossbox, did you fill in, Brian, did you go to riosquant.com and set up the free 2-week trial for the RQ Crossbox? Here it is again. There's the URL. All you have to do is go, if you haven't done it yet, Brian, just go to riosquant.com, hit the free trial, fill out your information, and you'll have access to the RQ Crossbox, which sets up the position sizing, the upside from the versus the downside list, etc. All right? And here is, once again, and I forgot to do that, once again, here is the link for tomorrow, and here is the link for the trial. I'll give that to you just a minute. With this trial, you've got to act now. I don't mean to be pushy. You're going to receive 100 hours of coaching and mentoring with workshops, and you're going to be eligible for this holiday discount that is beyond anything you've seen. I don't care what anybody's saying about 20, 40, 50, 60%. All of that stuff is a bait and switch. I assure you, if you take this, and I'll show you where to find it, I'll give you the link as well, you won't be sorry. No, Lee Chan, the recordings that we do are really designed for the trial member and the member for redundancy and learning. We think that by giving you a full rounded workshop like I've done today, I believe I have anyway, you need to motivate yourself and to determine whether you want to take the trial. That is what we would call fair. So this is the Einstein link. This will qualify you for any one of the different indicators. If you say you want all of the indicators in trial, all you have to do is say all indicators after you fill out the trial request. That's all you got to do. And we'll know exactly what we need to send you. Graham, the recordings are going to be placed in a private YouTube account that you'll be informed of. For now, we'll send you the link. Just email me, Graham, and I'll send you the link, but it's got to be uploaded first. Brian, you are in trial now? Okay, so just do Amber, email Amber and ask Amber for the video link so you can have that if you want it, and then set up an appointment with me for tomorrow in the after the trade lab, because I moderate that as well with Edward, so we can do a coaching session. I build a workspace for you that looks pretty much like this, following the 3-step metrics. Here's the ES and the notes. Step 1, what's going on? Risk on. Step 2, market selection. Who's in control and where is the money rotating? Step 3, which indicator are we going to use? So far, I used Einstein early morning, which did give me a $200 profit in my SIM account, which I showed you. Let's go over that one more time. So, you know, it is what it is. It is in SIM, I will say that. But here's the trade. Gold, and I've got crude oil, as we know, open at this point. But crude oil, I bought it at 04, sold it. No, that's not it. The long entry. Where is that? There's the crude oil. I'm down 50. This is what I have going for the day and for the month. This is in SIM. This is what I do in coaching. If you want a part of learning how to do this, this is where I am for the month, and it's based on a $50,000 account. So pretty conservative. And I showed you the gold, which was filled at 0670. Here it is. Got filled. Okay, here's the buy in its order. 1204.70, sold at 1206.70. That's the only live trade that so far is executed. And now I have, that's this right here, and now I have one crude oil trade that goes back here, and I will wish all of you a great day. Let me hear from you guys. Those of you that haven't done the trial, I'm going to tell you now, there's absolutely no obligation. This is, when I say that you have 100 hours of coaching and mentoring and workshops, you get that inside of a 30-day period. The use of the indicators are for 2 weeks, and you'll get an opportunity. If you start this trial ASAP, you're going to get a chance to save some pretty serious money. And then prices go up after the first of the year. There is an article that was placed, and I'm going to show it to you, and then I'm closing down. For those of you that stuck in, there's a lot of people that left. For those of you that stuck in, I want you to read something. Watch this. Our software and trading room was a part of a case study. I've mentioned it to some of you. I just got the report. I'm opening up my email account. Here it is. Go to Futures Truth. This was just sent to us. We want to send it to everybody, but we will need to talk to Futures Truth magazine to make sure that we're not going to violate anything. This is their cover letter. This was written by Dean Handley. He's visited 422 sites looking at ways to avoid failure and to place blame. I highly recommend you look this up, or if you want this, I can send you it on a request management. He mentions the companies, and I'm not afraid to show off any of these small group, but here we are. This is 10 companies of 400 plus companies that were monitored since March. Rios Quant was selected. Myself and Edward moderate our trade lab. Trade it. I'm not even going to read it. You read it for yourself. So email me. This is I'm just looking for it. Oh well, can't find it, but boy, it said a mouthful. There's a guy, he's a member, and he sent us a testimonial, and I can't find it right now. Well, maybe I can, just a second. I'm really proud of it. That's why I'm working hard to show it to you. This is no bogus either. Anybody that wants to stick and read it, you're going to read it any minute. You want to leave? I wish you well, and I hope you email me. Here it is. Just let me know. But this company is growing through testimonials, through referrals, and all I can share with you is that it's real. I put it in a folder. Here we are. Let's see if it's there. There's the most recent one. Okay. We keep these, but I'd like you to read this. For those of you that are still with us, I'll read it with you. There's still, you know what? There's more than half of you here. So Roger, Rich, Wayne, Riza, Santiago, Randy, Lee Chan, Jeff, JC. Hi, Quants. Today's December 19th of 2013, and I've made more than 1,000 US dollar in single trade, a personal record for an intraday trade. I can't stop thinking about my development as a professional trader. He's a proprietary trader. 2 years ago, I was trading with no confidence, no real profits, not even a real plan, not because I didn't have one, but because I had not found the appropriate. He needs to get that spelling right. That's okay. You know it's real. My maximum authorized lot size from the company that he works with was 25,000 for Forex and one contract for some futures, only NASDAQ and YM. Back then I saw EP, that's Edward Preston, of our Trade Lab, trading live, and something inside me felt like this is it. With no doubts, I took the 2-week trial, that was with me, and then I realized that a game changer was in front of me. After the 2-week trial program was finished, I became a member, and since then I have been in almost every Rios Quant event has to offer. The Professional Traders Retreat in Coral Gables, that's coming up in February and April. That's our headquarters in Coral Gables. The IQ Room with Joe Rios, the Spanish Room, Einstein Trial, etc. Today I see myself as a real trader. I've developed my own trade plan based on the Rios Quant's plan, and my lot size is now 150,000 minimum. And for Forex, and sometimes, as I did today, a risk-controlled 4-contract trade on natural gas futures. I can only say thanks to Joe, Edward, Steve, Ken, Amber, Javier, Augustine, Jose, and the rest of the team of this great group of friends and mentors. I can affirm there's nothing like this on the market, full of scammers. These guys are worth every penny. And I want to read this. This is going to get published along with that article, because there aren't a lot of real people out there, guys. And yes, maybe it appears to be shameless hype, maybe not, but I will tell you this. If you have any inclination to grow as a trader and you've just stumbled on us, however, do yourself the favor. Go to riosquant.com and start a trial. There's no obligation to it at all. All you have to do is go to that riosquant.com link. I'll give it to you one more time and say goodbye and have a great weekend. We'll see you tomorrow in the lab. So folks, enjoy. Try the trial. It's painless and it costs you nothing. And I assure you, even if you don't join us, you will have learned something. If you do join us, you will have made an educated decision. And with that, I want to say thank you very much. Have yourself a great day. May the great trades be yours tomorrow, because things are going to unwind for the remainder of the day. So enjoy it, and hope to see all of you in the Trade Lab tomorrow morning. Take care, guys.